What's going on, guys? Back. And today we got to talk about Apple trying their hardest to save the market, but it's just not enough. Their guidance was ultimately the problem here, but because of all those moves going on, that there's just been a devastating day in the market today, and we can see all of that right here with just the indexes because they are down terribly right now. The Dow Jones down 2.3%, 2.7%, the S&P down 3.6%, the Nasdaq down over 4%, and the Russell 2K hovering around that 3%, but this is some of the worst drops since 2020. So we all know what happened in 2020 to cause those drops, and we're right back at it right now with recession fears, and everything went very, very bad. Apple tried their hardest. They were the last big tech earnings yesterday, and everyone was paying attention to them. And they had fantastic earnings right here. You can see their EPS, they beat was expected to be $1.43. They made $1.52. Their quarter two revenue, over $97 billion, and they were expected $93 billion. So they beat on that. They had a new $90 billion share buyback they're going to do, as well as hike their dividends by 5%. And all of that was nowhere near enough to stop the bad news that came out, which was right here. Next thing, the CEO says supply constraints in Q2 will be lower. That was, what he said. But the bad part about this was that the guidance was going to be worse. They said supply chains could get worse and that they were guiding for a little bit of a rough end of the year. And that was not liked by the market at all. We can see it in the Apple's price here. So Apple right now, if we zoom in on this chart, we can see this was their earnings. So their earnings right here, massively up, massive. And then they came out and said, the end of the year might be a little tricky. It might have some problems. And then this just ultimate tumble all the way down, falling down to what is 157 right now. It's about 158 in after hours almost. But crazy moves, crazy news. Apple, the biggest company in the world, tried their hardest to bail us out of this stock market and say, everything is all right. They had great earnings, but their guidance wasn't good. So that shut down everything, which is crazy. But we can see Apple too just trading on here, kind of bouncing around between their all-time highs and then kind of coming down to this level, 150-ish. So, Apple kind of making a little bit of moves. Pretty volatile for a company like Apple, almost $3 trillion. So kind of crazy to see them, going up and down so much like this. That's a ton of money in market cap. But if we look at this as well, we have the biggest problem right now for the entirety of the market. Why the market is so red is this GDP print we got was negative 1.4%. Not good at all. Not good at all. It was expected or estimated to be 1%, and it was negative. So that means the growth of the economy, growth of companies and everything like that, down 1.4%. The economy is in a very tough spot. And for a recession, for a paper recession, for it to be official, is 2 negative quarters of GDP growth. So if we have the next quarter is negative as well, it'll be officially a recession. And nobody wants that. So that's going to add volatility as well. We were expecting 1%, got a negative read. Absolutely ridiculously insane, crazy. You can see how the market hates that. Countless red. Basically everything red. Volatility skyrocketing. Alibaba, I guess something happened in China that was good. Didi is a Chinese company too. So it seems like Chinese companies are green and US companies are taking a dive. So big problems with recession talks. Apple couldn't even bail us out. The indexes are down massive. Lots of problems to go on. If we look at even the S&P right here, we can see it's just been devastated for a long time. We had in January 4th was the top, and it's been downhill ever since then. We've just been keep going down. We can't figure out how to get up. And I think we would be officially in a bear market territory. I think it might be down 20% by now. Not positive though, but we could be in bear market territory for all the indexes, everything going on. and obviously not good at all. We see things like Netflix, the massive dumps, like $700 per share Netflix was. It's at 190 right now. That is massive, insane crashes. And, it was because they didn't have the growth they wanted. But it's just insane to see these numbers for these types of stocks going down this much. And then if you want to compare these stocks to something like Bitcoin, it's actually ridiculous that Bitcoin is holding up better than these stocks are. So the S&P and things and individual stocks are down 60-70%, crazy numbers. And if you went all the way back to Bitcoin's all-time high and did it to this price, it still wouldn't be 80% or 60% or something, but it would be, closer to 30-40% around there. So, but it'd still be better than things like Netflix and all this volatile stuff. But if you go recently from like January 1st, where the market started going down, the price of Bitcoin is like 43,000 and it's now 38,000. So it's less volatile than the stock market, which is insane to even think about that. Bitcoin is less volatile than the stock market. That's insane. No one would have ever thought you would ever be saying that, but we are now. And it's just insanely kind of crazy to even think about. So looking at Bitcoin now, maybe Bitcoin can bail us out of this whole market mess. Maybe if Bitcoin can find a nice pump and start getting up, it can drag everything else up with it. That might be the only hope we have left for this market right now. Big tech earnings are pretty much over. Amazon had bad earnings. They had a bad investment with Rivian, lost $8 billion. That was crazy. Google had not great earnings. They had okay earnings, but they missed on YouTube numbers. YouTube wasn't as good as they thought it was going to be. Apple blew earnings out of the water, devastated everything, was amazing, but guidance was a little bit of a letdown, and the market is completely tumbling. Recession fears. Everything right now is not shaping up to be too well at all. And we can look at the bond market here, the US 10-year treasury. So that is up almost 3%. So going up and up. That would mean people are selling bonds though, but it could be the Fed selling bonds. I'm not sure if we would get that information, as they're selling it. We'll probably get it after, but so bond yields going up means people are selling bonds. So it's kind of weird. What are people doing? If you hold cash, you're getting devastated by inflation. You're burning at 8% or something like that. If you hold a treasury bond, you're locking in at a lower rate because people are selling bonds and the rate's going up over time. If you're in the stock market's crashing. Things are going terribly, so you can't go there. If you're in Bitcoin, it's less volatile, but it's still going down, so you're losing money there. There's no winning in this environment. There's nothing to go on. There's nothing to invest where your money is safe and it can be good. So that's the biggest question now is what are people doing? Are they holding cash and dealing with the inflation and saying, we're just going to wait for the recession to be solved? Because right now it seems like we're heading in that direction. You can't buy bonds because the rates continue to go up. Why would you lock in a lower rate? But maybe people are buying bonds. Maybe that's where the buying is going, but it's not being shown because the rate's going up. So that means people are selling bonds. So crazy times, crazy market, really ridiculous stuff that you just don't know what's going on. Nobody knows where to put money and what to actually do right now. So I guess time will tell. We'll be waiting for our second GDP print next quarter to see if it's negative again. If it is negative, then it's an official recession. But at that point, maybe all the bad news, everything bad will be priced into the market, and that could be the buying time depending on how the Fed reacts. It could also be a devastating time because they might not ease monetary policy. They might not flood the system again with money this time around because they're fighting inflation now. So there's so many crazy things that no one knows the answer to. No one knows what to do, and everything is just kind of breaking down right now. So a lot of craziness, but only time will tell how it all plays out. Seems like we're in for a roller coaster ride, at least for the short term, in basically any asset on the planet. So we'll see how it plays out. But that's going to do it for this video, guys. As always, don't forget to smash the like button and subscribe. We're on the road to 1,000 subscribers. I'll see you guys in my next